Hi, and welcome to the Ichimoku One Glance Equilibrium Chart. Developed by Goichi Hosada in 1932 in Japan, it was kept a secret for 40 years until in 1968 it was finally published along with the calculations. It's now quite popular in Japan, especially among forex traders, which is why the Japanese yen can sometimes be a difficult pair to trade. It's also very effective for trading stocks, commodities, e-mini futures, and it's specifically a trend trading system, but you can also change the time frames on the trends, and I'm going to show you how to do that in another video. Now, the first thing you're probably wondering here is, what are these pink and purple clouds all over the screen? What's the blue line? What's the orange line? And I'm going to explain that to you, but you probably see one thing that's already familiar to you, and that's the candlesticks on the chart. The Ichimoku technique can be used with any type of charting system. It's an overlay, so I'm not specifically going to be talking about the different types of candles. I'm going to be talking about the Ichimoku clouds, as well as the two lines you see there, the blue line and the orange line. I just wanted to briefly also mention there is another line that I omitted, and the reason is because this was a technique that was originally created on paper, and it was a very, very long-term line. And it's just not something that I found to be very effective today, especially with all the computers. So what I did is I have another chart coming up in a few moments that's going to show you all the different signals here. What you see is the Dow Jones Industrial Average going back to January 2009. First thing I need to do here is to explain the blue line. The blue line in Japanese is called the Tenkan line, or the turning line. What it is, it's an average of the highest high and lowest low over the past 9 days. The second line, the Kijun line, which some people call the standard line, is the exact same calculation, except it's over the last 26 days, so it's more of a longer term line. These are very similar calculations to moving averages of a 9-day and 26-day moving average. If you were to actually overlap them, they would be very, very similar. These lines are slightly more jerky, however, but basically it's the same calculation. Now, the cloud. What is the cloud? The inventor of this technique, Goichi Hosada, who was not actually a trader, he was a journalist, developed it on his own with his own team of analysts and technicians, realize that support and resistance isn't always, one definite point or a line in the sand. What it is it can be an area that a chart or a stock commodity can move into and then move back out of without breaking and still be bullish. It's also a resistance line, so the opposite is then the case. If a stock is in a negative trend, it can move into the cloud, and as long as it doesn't break through the cloud, it will still maintain that trend. And you'll tend to see this over and over again as these clouds get tested. Now, the way the clouds are formed, there's two parts to the line. There's two parts to the cloud. That's why it keeps changing to orange to pink. To pink to purple to pink to purple, is because the lines will then cross over one another and then it will change. Depending on the system you have, it may change colors, it may not, it may be shaded, it may not, but there will be options to change that on your system. So the first line here, if you can see with my mouse, the way that's created is you take the midpoint between the Tenkan line here, the blue line, and the Kijun line, the orange line, and you then project it 26 days forward. So if you can look over here on the right hand part of the chart, you can see that there's a cloud, but it's ahead of time. This is actually today, this morning. And you can see the cloud over here to the right, and it's projected ahead. The second part of the cloud is the average of the last 52 sessions, highest high lowest low, then projected 26 days forward. And so what you'll have is a cloud here that's thick and thin and thick and thin. And the way I like to look at it is a projected type of volatility, a future forecast of the volatility, whether there's a lot of volatility or low volatility. And typically, the larger the cloud, the more volatility there may be going into it, and the thinner the cloud, the less. Typically, the thicker the cloud, the more important the break of the cloud. So what I did here is I wanted to go over all the signals with you and take into account long-term as well as short-term trading time frames. So here's a chart of the Dow. It's the same chart, and I just put numbers and a few circles and lines on it. I wanted to guide you through. This was from the very, very low of last year in March, around Dow 6,500 or so intraday low. Now, some people only want to trade the cloud. If it's below the cloud, they're out. Above the cloud, they're in. But you can actually fine-tune this technique, and that's what we do here because we're traders. We're not ultra long-term holders. But even if you're an ultra long-term holder, I would still recommend trading the cloud because eventually everything has to be sold. So if you take into account the number 1 here on the chart where there's a circle, the Dow is trading below the Tenkan line and it crosses over. This is the first type of warning sign that something is happening to the trend. The negative trend is weakening. The next thing you have here, number 2, the circle, is a cross of the Kijun line. So you have what's very similar to a 9-day moving average, crosses over, then it crosses over the 26-day moving average. The next step to be bullish is a cross of the cloud. That happens at number 3. This was mid-April 2009. Crosses the cloud. There's really, no debating about it. According to the Ichimoku cloud technique, we're now in bullish territory. What happens? For the next 2 months or so, the bulls are set loose, and we get a move from approximately 8,000 to 9,000 on the Dow. Then what happens? It breaks the Tenkan line, the blue line, breaks the Kijun line. Now we have the first sign of trouble. When this happens, for me typically as a trader, I would be out at this point. But if you are only trading the cloud, remember the cloud is support. You can enter into it from above. As long as you don't break through, things are still bullish. What happens? Stays in the cloud, does not break the cloud, then rallies above the Tenkan, rallies above the Kijun, you're back in. At this point, I wouldn't get back in until it was above the Tenkan or the Kijun line. The next candle over breaks the cloud, just above number 6 here on the arrow, breaks the cloud. Here at this point, we're definitely in bullish territory again, and the Dow absolutely takes off from about 8,600. Doesn't see even the tiniest little bit of trouble until 9,250 when it breaks the Tenkan. That's a very short-term indicator. You can always use the second line, the Kijun line. Remember, that's approximately a 26-day moving average. Continues above there. We have a very small dip below. Continues. Very nicely above the cloud. Here, number 7, there's a test of the cloud, touches it, continues moving higher. Number 8, you see the exact same thing that happened at number 4. Breaks the Tenkan, breaks the Kijun. Remember back here, breaks both. What's next? A test of the cloud. And then what happens? It tests the cloud. What happens? It actually breaks the cloud. This is certainly not a good area to be in. You don't want to be bullish here. And this is an area where you have to look at things on a daily basis. But then what happens? There's actually an old trading rule, is that you ignore the first sell signal in trend. According to the cloud technique, this is actually the first sell signal from the new trend of April 2009. It's a bit of a general rule. It should be taken, on an individual basis, but that is an old trading rule. So what happens here? You're out, and you missed a little bit of this rally back up. That can happen, but what happens is it breaks the Tenkan, breaks the Kijun. At this point, it's a very important point, breaks both lines, looks like it's about to break the cloud, and it does. Here at number 11, breaks the cloud at 10,500, and we're up almost another 500 points, all the way above the Tenkan line at this point. continuing to stay in bullish territory.